You're probably wondering where the market is heading. Well, so am I. And one thing that can tell us a lot about market sentiment is the prevalence of initial public offerings. Now, there's some early signs that the IPO window may be getting ready to open up again. You might ask, well, when did it close? We're going to talk about that. We're going to tell you how to navigate present and future IPOs without getting burnt. And I can speak from experience because I've been burnt myself enough times. We're going to look at what IPOs can tell us about market direction. Take a look at the latest IPO, which some pundits say may be the catalyst to open the doors for any of the 1,000 unicorns out there to exit. So there's over 1,000 companies that have a valuation of more than $1 billion that might look to IPO because their investors want to see a return on their capital. So two big market events that I remember vividly. The first was when I worked in startups. We were trying to become option millionaires. This was around the turn of the century. And I wasn't affected very much by the dot-com crisis because I was spending all my money on alcohol, fast cars, and faster women, and the rest I was wasting. Now, the second market event that happened that was a big deal was when I started working at Morgan Stanley and all hell broke loose in the markets. This was around 2008. At that time, I spent about 6 figures on B school and just wanted to keep my job, so I wasn't very exposed. But in both cases, I saw the pain and havoc the markets can wreak on investors. It was just incredible to observe the decimation of so much wealth around me. And there was a great piece by Bloomberg that tries to put the possible bubble today that we see around AI in context relative to the dot-com era. And of course, they compare NVIDIA to Cisco. In the chart in the upper right, you can see where one could argue that NVIDIA, based on a particular earnings multiple, is in line with Cisco, while the chart on the lower left shows how, judged by sales multiples, that NVIDIA is still significantly overvalued and will take a Cisco dump eventually. So Cisco actually saw the value of their stock plummet by 80%. And so we talk about peak to trough value loss. Now, the real question to ask here is, can earnings that have grown so fast, in the case of NVIDIA, possibly be sustained? Well, one thing to remember is that bubbles don't always bubble, and you can look at the U.S. financials 2008 disaster, which didn't follow obvious excess in equity markets. This chart shows the banks index, and that bubble was absolutely horrible. I can remember the CEO of Morgan Stanley in our office. He was on television cussing about short sellers going to ruin his firm. It was an incredible event watching people walk out of Canary Wharf with boxes in their hands when Lehman went bust. So a bad black swan event can happen at any time, though historically IPOs have been a sign of irrational exuberance, at least in a couple cases. Here you can see around the year 2000 there, the large number of IPOs. Many of these didn't have a pot to piss in. And then you can see in 2021 here, this is very interesting, there were 422 IPOs and 613 SPACs. And since SPACs started, we've been warning investors about them. We covered over 100. And I think out of those, we said to avoid all of them except 2. That happened to be a very good observation because investors had their asses handed to them. Everybody else made out like bandits. Now, know the signs. This is a good article that talks about the dot-com bubble of 2000 and what you should be watching for when it comes to evaluating IPOs. So a business plan that promises to change the world. Well, we saw plenty of those in the SPAC times, right? A get big fast strategy to reach ubiquity and corner a particular market, same thing, right? A tendency to sell products at a loss in order to gain that market share. And this also points to companies that weren't selling anything. And they talk about this sky-high valuation divorced from any sort of profitability or rationality. So having some measure that we can use, such as simple valuation ratio, that's our variation on price to sales, we can use that to determine if any particular IPO is overvalued. Take, for example, the recent IPO from Astera Labs. So we covered that here in this presentation. And what we've observed is that they're currently trading at a simple valuation ratio. This is market cap divided by annualized revenues of 55. You can compare that to some names here in our catalog. We have a tech stock catalog of over 460 stocks. We calculate this for, I think, 180. And you can see the richest names here, NVIDIA, Palantir, CrowdStrike, Coinbase. What you need to do is always have a cutoff. So ours is 3 times our catalog average, which happens to be 6.5. So we wouldn't invest, let's say, in a stock with an SVR above 20. Well, this would make Astera Labs certainly the richest stock in our catalog. And what you can do then is plot these SVRs over time and observe how they change in response to hype. So you can see how Palantir's been hyped over the past year because of AI. You can also see NVIDIA going through their hype cycle. And of course, we've marked the cutoff there. Just set your cutoff and say, all right, I'm going to target adding shares at a particular valuation and stick with that. And what comes up always goes down. Now, the latest IPO is a cybersecurity firm called Rubrik. And you can see here TechCrunch saying, well, Rubrik's IPO filing hints at thawing public markets for tech companies. The article makes some good points here. They talk about how there's more than 1,000 unicorns in the world today, as we said, that need to find an exit, and that many of these firms are waiting for a clear starting gun, and that perhaps if Rubrik can price and trade well in their debut, this could help other enterprise-focused software companies take a shot at going public. So when we think about investing in cybersecurity, this is a relatively mature investment theme, and you can tell that by looking at the available ETFs and what they contain. But what's rather interesting, we did this analysis, I think, 3 years ago. It's somewhat dated, but the point still stands that when you look at the top stocks in the 4 biggest cybersecurity ETFs, you can see that not everybody can agree upon what a cybersecurity company is. And you take a look there on the left, First Trust's top 10 holdings. Then on the right here, I put First Trust's top 10 holdings. You can see how significantly those have changed. So cherry picking a leader, not some legacy laggard, may be a better approach to investing in cybersecurity, which is what we've done. And one way you can gauge finding a leader is by looking at the size of these companies, their market cap. You can see CrowdStrike flirting with first place position. We've been covering CrowdStrike since it was a billion-dollar company. You can see some of the past pieces we've written about the firm. Make sure you subscribe to this channel so we'll help guide you through whatever the market throws your way. And for those of you already subscribed, Wyatt's going to put a link to our free newsletter in the comments section. You should come join our global community of sensible investors, nearly 20,000 strong, on a journey to create wealth which doesn't involve taking excessive risk. So when we think about cybersecurity, I love this Dilbert cartoon. So they show Mordak, the preventer of information services, and he says, security is more important than usability. In a perfect world, no one would be able to use anything. And then it shows one of the employees there at his desk, and it says, to complete the login procedure, stare directly at the sun. And it's just an example of how when you work in these large corporations, it becomes very difficult to do your job because everybody's so worried about cybersecurity problems. And Rubrik here talks about securing the world's data. They take this interesting approach. So first of all, cyber attacks are inevitable. We know that. Let's just assume everything's compromised within an organization. That's called zero trust. You don't trust anybody. So they take this approach to data security. They're using Microsoft OpenAI. Fortunately, they didn't cram this down everyone's throats in their S1. It's a given that firms are using AI these days. And as we talked about in recent pieces, the legacy, or say the OGs of AI, will be the biggest beneficiaries of new AI methods. And Rubrik began offering their security cloud native SaaS solution in fiscal 2023. Prior to that, they had these appliances and they had perpetual licenses, and it just wasn't a very optimal business model. When we look at their competition, we see that this is a very interesting statement. They say most of our new or potential customers have already installed data management systems, which gives an incumbent competitor an advantage in retaining a customer due to significant risk to data continuity from switching vendors. So for them to be growing, they're growing quite fast, they must be doing an excellent job of displacing competitors such as Dell, IBM, Commvault, Veeam, and Cohesity. At least in the case of Dell and IBM, displacing some old legacy dinosaurs. You can see here Gartner's Magic Quadrant for enterprise backup and recovery software solutions. So when we look at Rubrik, all the metrics are checking out. So they have cloud-based annual recurring revenues of $525 million, whilst their total subscriptions are $784. So they're doing that transition, as I talked about. To put that into perspective, CrowdStrike comes in at about $3.4 billion in ARR. Their net retention rate is 130% versus 120% industry average. Their revenue buckets are showing strong growth, and this migration to SaaS and elimination of perpetual licenses is nearing completion. Now, one thing to note here, on revenue recognition, they recognize a significant portion of their revenue ratably over the term of subscriptions, yet they get that money up front. So when you look at their operating cash flows, you need to keep that in mind. So they say here, one side effect of that is that any decreases in new subscriptions or renewals in any one period may not be immediately reflected as a decrease in revenue, but would come in the future. So this makes it difficult to gauge how they're progressing. In other words, there's a lag that you need to pay attention to metrics to make sure that the health of the business is being monitored appropriately. One way you can do that is by looking at these buckets. So number of customers with 100K spend, greater than 100K spend, customers with greater than $1 million spend, and just those ought to be increasing over time. If they're not, that's a problem. Now, when we look at their financials, we see here strong growth along the top table there. You could see how the maintenance and other are decreasing over time as they move to pure subscriptions. We can see heavy spending on sales and marketing. That's par for the course. It's funny, you go to Google and search for them, and their competitors are actually saying, are you looking to switch from Rubrik? So they're all trying to steal each other's pie. But when it comes to this IPO, we don't find this very interesting because we've already made our bets in cybersecurity with leaders. But if you're thinking about participating, set some limits ahead of time. So, for example, you may take a look at some other cybersecurity firms. We've put up 4 of them here in our catalog, and we've calculated the average SVR over the past year. So what? That's around 10, right? So set a target of 10. That means your maximum market cap based on last quarter's revenues annualized is going to be $6.35 billion. Well, interestingly enough, this data platform Caplight estimates their current valuation is around that $6.3 billion. So there you go. Now, one other thing I noted that was rather interesting, and when you see something like this, you have to say something about it. So they mentioned they received a grand jury subpoena from the Department of Justice about an employee from one of their sales teams who is no longer with the company. Okay, fair enough. But then they had this internal investigation. They said, we have discovered communications among certain employees within one of our sales teams, including that prior employee, former employee, that relate to potential violations of federal law in connection with government contracts, and they're cooperating with the Department of Justice. So that, as I said, they say, well, we can't gauge the potential impact of that. So this is a big unknown, certainly a red flag, something to pay attention to if you're an investor. Now, just some bits and bobs here. As we've seen in the past, private equity firms provide support for cybersecurity stocks. So when we had the 2021 meltdown, you saw a lot of PE firms coming in and purchasing cybersecurity assets on the cheap. Vendor consolidation is a focal point for CTOs. This is one of the reasons we like CrowdStrike, is because they have all these modules, and what they can do then is they can displace companies that are quite vertical. So CTOs these days, they want one person to yell at, right? If you have 2 third parties that aren't playing well together, that's a nightmare because each party is going to blame the other party, right? And you're stuck in the middle of that. So CTOs are always looking to consolidate. And what we're also seeing here is that legacy tech companies are getting absolutely destroyed by nimble competitors. That's just what happens over time. That's how technology works. Now, nothing special stands out about Rubrik's IPO, to be honest, but in all cases, whenever you're looking at an IPO, you're just better off letting the dust settle. We have our own internal rule that says, look, they need to have filed a 10Q or a 10K after their IPO before we even consider investing. So make sure then to keep things in perspective and have a strategy when you're investing in general that works the same whether markets go up, down, or sideways. Sleeping well is really underrated, so make sure that you're diversified across multiple asset classes. Successful stock pickers are far and few between. We've seen a lot of people coming around and preaching the merits of Peter Lynch or Warren Buffett. The reality is that when 95% of professional money managers can't beat the market in the long run, the Joe retail investor sitting around in his underwear on a Saturday researching stocks isn't going to be in that 5%. There are very few Lynches and Buffetts in the world. And if you want to have the best odds of accumulating wealth, and it's not taking risk. Now, IPOs have been traditionally associated with peak market conditions, except perhaps in 2008. And the IPO market may be thawing, and if so, expect to see loads of AI IPOs. And we're going to be here to help you navigate the IPO hype space, such as we did here in this piece. AI IPO, that's rather misleading because Astera isn't really an AI firm. It's more incidental, but you can watch the piece for yourselves. Please make sure to sign up for our newsletter in the comment section. Make sure you're subscribed to our channel. Thanks so much for taking the time to watch this today.